Okay, friends, we'll continue where we left yesterday. Are you ready? Guys, we're going to solve the questions also today. Okay, so last lecture we saw bad debts. You remember? Bad debts. Tell me, if you are an assessee doing any business or profession, in that business or profession, whatever income is taxed, whatever income is, from that income, if some bad debt happens, from that income, if any bad debt happens, so that bad debt is allowed as a deduction. For example, in my business or profession, some sales are made in this previous year. Some sales are made in this previous year. The sales can be cash as well as credit sales. Cash sales is also my PGBP income for this year, and credit sales also my PGBP income for this year, because this entire sales was made in previous year 24-25. So this is the income of my previous year 24-25. And since I am following mercantile system of accounting, so entire income, whether I have received or it is still receivable, will be taxable under the head PGBP. So the amount of sales which was credit sales, which is already considered as my PGBP income, will be taxable. And now you see that they are converted into debtors. Entry which I would have passed will be debtors account debit to sales. So this sales which I have already considered as my income is now converted into debtors. Now out of these debtors, which is already considered as my PGBP income, if some actual bad debt arises, then that actual bad debts will be allowed as a deduction while computing my PGBP income. But the only requirement is bad debt is happening out of my income which I have charged under the head PGBP. And number two, the bad debts which I am claiming as a deduction has to be written off in my books of accounts. Yes or no? To the extent my debtors will be reduced and I would have shown that amount in my P&L. So that is the only requirement. Based on that, I'll get the deduction of bad debts. Now, if I'm creating any reserve for bad and doubtful debts, that I'm not going to get deduction for, because this is not my real expense, this is not my real loss. So it will not be allowed as a deduction. Now, this much we studied last time. Now, why I repeated this? Come on, see this. If the assessee is engaged in banking or money lending business, which business? Banking business or money lending business. So in this business also, what happens? Bad debts might arise. But here the bad debts will be allowed at both the times. Even if the amount is not considered as your income, still it will be allowed as a deduction in the form of bad debt. Now what happens? See, my business is banking business or money lending business, meaning I'm giving loans and advances. I'm giving, that is my business. I will give loans, advances to different types of borrowers, and from them I'm earning interest. So that interest which I'll be earning, will it be my PGBP income? Yes or no? My business is to give the loans and advances and earn interest income. So that interest income which is coming to me will be my PGBP income. Why? Because my business is banking or money lending. So now this interest income for the entire previous year 24-25, will be taxable in this year only. Whether I have received or it is still receivable, will be taxable under the head PGBP only. Why? Because I am following mercantile system of accounting. So if the assessee is following mercantile system of accounting, whatever interest received or receivable by him will be taxable under the head PGBP. Now tell me, it is as good as my cash sales, it is as good as my credit sales. Now out of this receivable interest, if some interest later on becomes irrecoverable, this is as good as my bad debt. Yes or no? What I have done? I have shown an amount as my income. Out of that amount, some bad debt is happening. So that bad debt will be allowed as a deduction under section 36(1)(7). There is no doubt about this. Getting my point? And these type of assessees who are engaged in banking or money lending business, they will also get the deduction for provision for bad and doubtful debts. Because their line of business is like that only, that they have to create such type of provisions or reserves as per RBI guidelines. So if you are doing any normal business, then in that normal business, provision for bad and doubtful debts will not be allowed as a deduction, because that is just an imagination. Yes or no? That is not real expense. But if you are in the business of banking or money lending business, then in that business, whatever RDD, reserve for doubtful debts, or provision for doubtful debts you had created, will be as per the RBI guidelines. There is a statutory requirement for you to do it. You are not doing on your own. Getting my point? So if there is a statutory requirement, if you are not going to do it, bloody RBI will close your bank. So there are certain NPS on which you are supposed to create reserves. So even those reserves for bad and doubtful debts are also allowed as a deduction. But for others, this is not allowed. Getting my point? Now how much will be allowed? Yes or no? On the basis of what conditions it will be allowed? That is not to be learned in CA intermediate, because this deduction is applicable in CA final. Yes or no? Now, see, this bad debt actually happened. This bad debt actually happened from your taxable income. For others also, the bad debt is happening out of taxable income. Now, what is the difference here? See, if you are in this business, no, you might have given loans and advances also. Have you given loans and advances to the borrowers? Now, if some borrower happens to be Mr. Vijay Mallya, or some borrower happens to be Mr. Nirav Modi or Mehul Choksi, forget about the interest which is receivable from them. They will run away with the principal amount. Entire loan, entire advance is becoming irrecoverable. Now, have you shown this amount as your income? This is not your income, this is your asset side item. Loans and advances given to the borrowers is your asset side item. Now, if this will become irrecoverable, so as per clause 7, this will also be treated as your bad debt. This will also be treated as your, because your nature of business is that. Your business is banking or money lending. In the course of this business, whatever loans and advances are given, if even they will become irrecoverable, they will also be treated as bad debt, and for that you are going to get the deduction. Will you remember this? Yes or no? But wait. I am not in the business of banking or money lending. Can I give loans and advances to anyone? Can I give loans and advances to anyone? For example, I am in the manufacturing business. My business is not banking. My business is not money lending. I am in manufacturing business. So in the course of my manufacturing business, can I give advances or loans to someone? Yes. For example, I have given advance to my suppliers to get raw material. What if that advance becomes irrecoverable? Will it be considered as bad debt? Only the loans and advances given in the course of this business becoming irrecoverable will be treated as my bad debt, and for which I will get the deduction under clause 7. Yes or no? But if I am in any other business, for example, I am this assessee, and in my manufacturing business, I am granting some loans and advances. For example, I am giving advance to supplier. Now that supplier is running away with my money, or he forfeits my advance. Will it be treated as my bad debt? No, because my business is not to give such loans and advances. So this will not be treated as my bad debt. This will not be treated as my, I cannot claim it under clause 7, but still I will get the deduction. Why? Considering this as my business loss. And for business loss, there is no specific provision required. Only common sense is required. In the course of doing my business, I gave some advance to my suppliers. The advance was forfeited or the supplier ran away with the money, this is a loss happening in the course of my business for which I will still get the deduction. But I will not get the deduction in the form of bad debt because it is not treated as a bad debt. Getting my point, everyone? Hello, sir. Will you remember? So this was your clause number 7. Now pay attention. Now if the bad debt was allowed, as a deduction. Later on, the bad debts are recovered. Even that recovery will be treated as your income, deemed PGBP income. First of all, see, you recorded a sales of rupees 5 lakhs. It was your income. But out of that sales, some bad debt happened. 5 lakh was your income, 5 lakh became bad debt. So first 5 lakh was treated as your income, then for 5 lakh you got the deduction, saying that it is a bad debt. Now bloody, if you are receiving this 5 lakh or any amount out of that, that again should be treated as your income because that 5 lakh was allowed and out of that amount only you are getting the recovery. Getting my point? So any bad debt which was already allowed as a deduction, out of that bad debt, later on you are recovering some amount. So that recovery of bad debt will also be treated as your income, taxable under PGBP head because that is treated as deemed PGBP income. And remember, even if you are doing the business or not doing the business to which the bad debt relates in the year of recovery, still that bad debt will be taxable under the head PGBP. So in the year 24-25, you are recovering some bad debts of business A, which you have closed long back, 4 years back only, the business is closed. And for that business, which you are not doing right now, there was some bad debts, which was allowed earlier, and now you are recovering it. Still it will be taxable under the head PGBP, even if the business is not in existence. Will you remember this? Hello? But sometimes it might also happen that the bad debt was not allowed as a deduction because you failed to write it off. Hello? Did you write off your bad debt? No. So it was not allowed. And assessing officer came to know that bloody you have actually received this amount. Actually this amount was receivable. You are treating it as bad debt, but this is not actual bad debt. He has not denied, that opposite party has not denied that he is not going to give you the money. And definitely you have not written off the amount from your books also. So the bad debt you wanted to claim, but the bad debt was not allowed earlier. Getting my point? And now that later on this bad debt is recovered, it will not be again taxed. Why? Because it was not allowed. It will not be taxed in the form of deemed PGBP income. Ignore this amount. So how much recovery you will tax? Only that bad debt or any part of that bad debt which was allowed as a deduction. Any bad debt which was not allowed as a deduction earlier, recovery of that bad debt will not be taxable as your deemed PGBP income. Ignore that amount. Will you remember this? This was your clause number 7. Now coming to clause number 9. If you are an assessee, company, and you have incurred any expenditure for promotion of family planning amongst your employees. So to promote the family planning amongst your employees, if you have incurred any revenue expenditure or a capital expenditure other than cost of land and building, 100% of that revenue and capital expenditure will be allowed as a deduction. But remember, capital expenditure will be allowed in 5 equal annual installments starting from the year in which such expense was incurred. Revenue expenditure will be fully allowed in the same year only. Yes or no? Capital expenditure also will be fully allowed, but it will be allowed in 5 equal annual installments. And remember, this deduction is available only to the company assessees, for the expenditures which the company has incurred for promoting what? Family planning amongst its employees. Will you remember this? Now, you might have seen a statement like this. I have created this type of statement at least 2 to 3 times. You are earning a business income of 10 lakhs. Out of that, business expenses 8 lakhs. How much is your business profit? Out of this business profit, now you will claim capital expenditures. First, which capital expenditure? That capital expenditure which is allowed in the form of depreciation. So claim depreciation first, because section 32 comes first. Yes or no? Then some profit remains. Out of that profit, now take the another capital expenditure. Now take the deduction of another capital expenditure. Any capital expenditure, meaning any asset acquired for the purpose of scientific research, take that deduction. Now, if any profit remains, then from this profit now you are going to take the deduction of this capital expenditure. Capital expenditure for promoting family planning. But full amount you will take, or only 1/5. So for example, the capital expenditure incurred was 3 lakhs. Will you take the entire 3 lakhs? Entire 3 lakh will be allowed in this year, or only 1/5? What is 1/5? 60,000 will be allowed. But wait, how much was your profit? 20,000. How much was your profit? And how much is the deduction available? So balance 40,000. Will you call it business loss? No, this is your unabsorbed capital expenditure on family planning. It will also have the same treatment which you give to unabsorbed depreciation. Do you remember what treatment? Unabsorbed depreciation is allowed as a set off from any business income. If not, then income of any head except salary in the same year. If not possible, then carry forward. Carry forward, and in the subsequent year, it can be set off from any income except salary. And if no income is there except salary, no other income is there, then it will be carried forward to subsequent year. Likewise, it will be carried forward for indefinite period. So the same treatment given to unabsorbed depreciation will be given to unabsorbed capital expenditure on scientific research, and that same treatment will be given to unabsorbed capital expenditure on family planning. Will you remember this, everyone? So this was your section 36, subsection 1, clause 9. Now coming to clause number 15 and clause number 16. See, in section 36 now, if you see this expense, take it as a deduction. If you see this expense, take it as a deduction. Only the names are given, bloody. And if these expenses are specific expenses are there, even we will consider these expenses or these items as your business expense. You can reduce these items from your business income while calculating your PGBP income. No need to worry at all with any of the things given in the PGBP head. This is one of the most easiest head, I'm telling you. And today when we'll be solving the question, now you'll come to know how easy this is. But small things which we are discussing while, discussing about a deduction, those things you are just supposed to keep in mind. That's it. You will solve one question today, then you will come to know. The first question only I'll solve now, you will come to know that how easy this chapter is. And as I have promised, you will get the answer on your calculator within 1 minute. Otherwise, I'll stop teaching. 100% within 1 minute, you will get the answer on your calculator. And then, what you are supposed to do? You just have to give the presentation. That's it. Okay. So now, this clause, this 2 clause also talking about some type of expense. If you have this type of expense, then take the deduction. That's it. Subject to condition. What is the condition and what is the expense? Please check what you can understand from this and let me know. Anyone can explain? Come on. Yes, madam. Say. So, will you be allowed the deduction only if you are a trader? Or you are involved in speculation also? Because at the time of doing speculation also, buying and selling happens on stock exchange. So, normal share trading business or even the speculation business in shares. Whenever you do any buying and selling, any of what? Shares and securities on a recognized stock exchange, that time you are liable to pay STT. For that STT, you are going to get the deduction. That STT will also be treated as your expense and you are going to get the deduction. The only requirement is the income arising from buying and selling of shares and securities is taxable under the head PGBP. That's it. So buying and selling might result into normal business income if you are into share trading business, and buying and selling might result into speculation business income if you are into share speculation business. Yes or no? Hello, sir. So sometimes you can buy or sell commodities also through a recognized commodities exchange. And at the time of buying and selling commodities on the recognized commodities exchange, one tax is paid there also, that is known as CTT, commodities transaction tax. Even that commodities transaction tax will be allowed as a deduction. That is also treated as your expense. Claim it as a deduction, provided buying and selling of commodities is resulting into an income which you are charging under the head PGBP. Then that CTT will also be treated as your PGBP expense. Yes or no? Yes or no? Wait, huh? What is happening? Okay. Did you understand this? No, it went away. This Zoom automatically it closed, and now it has started. It has started online. There was some problem in the network, so it went and again it came. Sure, no? Okay. Now pay attention. 36-1 is over. 36-1 is, so majority chunk you have completed now. Now one last deduction. We started from section 30 and we completed 36-1. In every section, no, there was a specific item for which they were saying that if you see this type of item, you can claim this amount as a reduction from your PGBP income. From your PGBP income, reduce this. What? Rent, rates and taxes, repairs, insurance premium of your building which you are using for your business or profession. If you incur any of these expenses, you can reduce these expenses from your business income. Yes or no? Deduction is allowed. Deduction is allowed. Meaning you can reduce. Which section allows you this deduction? Section 30. Then if you will come to 31, 31 gives you the deduction for two more expense. What? Repairs and insurance premium of what? Plant, machinery, furniture. Plant, machinery, furniture. Yes or no? Repairs and insurance premium. Now when you come to 32, cost of the asset is there which you are using for the purpose of your business or profession. Don't take it as a deduction. Okay. No problem. Don't cry. Take it as a deduction in small parts in the form of depreciation. Then you will come to section 35. Oh, donation for scientific research. Take it as a deduction. Expenditure for scientific research. Take it as a deduction. 35 AD. Capital expenditure. You are doing a specified business. Take the entire amount as a deduction. Then came to 36. Insurance premium of stock, insurance premium of employees, medical insurance premium of employees, then bonus commission. Likewise, all these expenses which are given from 30 to 36-1 are each and every expenses is a specific expense, specific item which you can claim as a deduction while computing your PGBP income. Still you can incur some expenses for your business or profession. Still you can incur some expenses for your business or profession which are yet to be covered. Example, you have purchased the stock in your business. Isn't it your expense? Tell me which section says that this expense will be allowed. Section 32, 36-1. We have checked all the sections. In which section the deduction for this expense will be allowed? No section is giving you the deduction for this expense. General deduction. What? In Hindi we say, jiska koi nahi, uska general deduction. Hello. If nobody is there to take care of you, no, don't cry, macha. 37.1 is there. Electricity charges. Electricity charges of this classroom. Deduction under 37.1, general deduction. Advertisement expenses. Salary paid to my employees. I'm incurring expenses to give the perquisite to my employees. Yes or no? There are lot many things. Cleaners are coming, cleaning the entire office, factory premises. Cleaning work is done. So I'm paying the amount to cleaners. Advertisement expenses, marketing expenses, promotion expenses, administrative expenses, general expenses, this expense, that. In the business, you can have multiple expenses. So they started identifying expense and allotting the sections. Then they realize that we are fools, trying to identify each and every expense and giving the deduction for each and every expense under different section. Bloody, the numbers will exhaust, but the expenses in the business will not exhaust. And how many such expenses will be able to identify? Yes or no? So now we will stop identifying. No identification. Everything will be covered in general deduction. 37.1. But you'll have to satisfy the conditions. The expenditure should not be of personal nature. It should not be a capital expenditure. Meaning it is a revenue expenditure. Yes or no? And the expenditure is wholly and exclusively incurred for the purpose of your business or profession. And that expenditure is not covered by any of the earlier sections, 32, 36.1. If your expenditure satisfy all these conditions, then most welcome, claim that expenditure also as a deduction from your business income. This is general deduction. Yes or no? So 4 conditions. Number 1, expenditure should be personal or should not be personal. Expenditure should be capital in nature or should not be capital in nature. Meaning the expenditure should be revenue in nature. Should be wholly and exclusively incurred for the purpose of your business or profession. And that expenditure should not be covered by any of the provisions of section 32, 36.1. Then that expenditure will be allowed as a deduction. Few expenses. I have already given you the examples also. Will you remember this? Hello, sir. Now pay attention. Now there are 3 explanations. Explanation number 1 to section 37.1 says that if you have incurred any illegal expenditure, you will say, sir, this illegal expenditure was not my personal expense. I am not incurring that expense for myself. See, I am incurring that expense on a regular basis. So it is not a capital expenditure also. And this is wholly and exclusively in the interest of my business or profession. And you can check, sir, this is not allowed under 32, 36.1. Meaning all the 4 conditions are satisfied. But since the expenditure was illegal, it will be assumed as if it is not incurred for the purpose of business or profession, and hence it will be disallowed. Even if all the conditions you have satisfied, yes or no? But still you will not take the deduction for that expense because that expenditure was illegal. And as per the explanation 1 to section 37.1, that expenditure if incurred will be assumed as if it is not incurred for the purpose of business or profession, and hence no deduction for such expenditure will be available. Will you remember this? Second explanation is applicable only if the assessee is a company. Only if the assessee is a companies are sometimes required to incur an expenditure on CSR activities. Which activities? See, in the Companies Act No 2013, there is one section 135, which says that if you have satisfied the conditions mentioned there, if you are a company, satisfied the conditions mentioned under that section, then out of your net profit, certain amount, certain percentage you will have to spend for different CSR activities. So activities are also prescribed under the Companies CSR rules. So if you'll go to company CSR rules, in those rules, certain activities are prescribed. These activities are known as CSR activities. So out of your profit, certain percentage you will have to spend on those CSR activities. Yes or no? Hello? If there is any specific section in the Income Tax Act, because of which you can take that deduction, you can take it. If that expenditure which you have incurred for CSR activities, if that expenditure is specifically covered under any special section, like, have you heard about that section 35? Section donation to approved institutions for scientific research, etc. That is a CSR activity. So meaning that if we have donated for scientific research, statistical research, etc., it is as good as using the money for CSR activity. For that, definitely you are going to get deduction under section 35. Because 35 is not a general section, it is specific section. If you donate to Prime Minister Relief Fund, National Relief Fund, such donations to certain specific type of notified institutions, for those donations you will get deduction under 80G. That donation is also considered as CSR activities. So sometimes some specific type of donations will be considered as CSR activities, and for those donations specific deductions are available under Income Tax Act. Claim those deductions, no problem. Because to give you that deduction, a specific section is there allowing you the deduction of that specific expenditure. Even if that expenditure is made for CSR activity, if it is covered by a specific section, you can take the deduction over there. We don't have any problem. But for example, you have incurred some expenditure on CSR activity. And if that expenditure is not covered under any of the specific provisions of the Income Tax Act, and now you want to call that expenditure as your general deduction under the PGBP head. You want to claim that as an expenditure under section 37(1) as a general deduction. You will not get that deduction. Why? Deduction under section 37(1) general deduction is available for the amount which you are spending on CSR activity is not your expenditure. It is appropriation of your profit. After calculating profits, some part of your profit is used for CSR activity. That does not make that amount your expenditure. And since it is not your expenditure, you cannot claim it under section 37(1). Because 37(1) specifically gives you the deduction only for bloody the amount of your net profit will be calculated only after claiming all the expenditures. And out of this net profit, if some amount is used, that is appropriation of your profit and not your expenditure. Yes or no? So that you cannot claim under section 37(1) because it is appropriation of profits. But see, if that CSR expenditure is covered by any specific provision of the Income Tax Act, then for that you can get the deduction under that specific provision. But you cannot claim it as an expenditure under section 37(1) if it is not covered under any specific provision. Yes or no? This was your explanation 2. Now explanation number 3 says that if you have incurred any expense for any offense, to commit any offense or to commit any crime, you have incurred any expense, or after committing crime you are compounding that offense. You are, what is the meaning of compounding of offense? No. Compounding of offense. I'm not talking about compounding benefit. For some offense, if you are supposed to go to jail, and if you want to save yourself from going to jail, you can pay a compounding amount to save yourself from going to jail. So there are GST provisions, there are provisions under different laws, because of which you might go to jail. Now to save yourself from going to jail, you will compound that offense. Compounding the offense means paying a amount in lieu of going to jail. So sometimes some economic laws are there. For example, SEBI law is there. You have contravened the provisions of SEBI. It is an offense, but it is an economic offense. You have not murdered someone that you should be hanged. But definitely there are provisions for your arrest, and you can be sent to jail also as per SEBI provisions. Yes or no? In the GST provisions also, there are certain offenses which you commit, and for that you can be sent to jail. There is a special section under GST 132 which talks about arrest of the person and sending to the jail. Prosecution will happen. But see, these are all economic offenses. This does not require that you should be put to jail always. If you want to save yourself from going to the jail, pay a compounding amount and save yourself from going to jail. That is known as compounding of offense. So are you incurring any expenditure for any offense? Yes. Are you incurring any expenditure for compounding of offense? Yes. It will be assumed as if it is not incurred for business or profession, and that amount will be disallowed. And now next one, they are saying that if an expenditure is incurred in the form of amount given to any person, which this person cannot legally accept from you. You are an assessee. You can legally give that amount to anyone. For you, it is not illegal payment. For you, it is not but the person to whom you are giving it, legally he cannot accept such amount. The best example is, I'm a chartered accountant and I'm doing an audit of any company. And I find some, discrepancies and alarming things which I have to report in my audit report. That company is coming to me to change my audit report, and for that they are ready to pay me some amount. Can I accept that amount to modify my audit report? That will be professional misconduct. So as a chartered accountant, I cannot accept that amount from company, from my clients, to manipulate the audit reports and audit findings. Getting my point? For me, it is not allowed. But for that company, there is no law which tells that company that you cannot pay that amount. Hello? One more example I'll give you. Doctors are there, doctors. You go to any doctor, the doctor will prescribe medicines. The doctor will prescribe. So if the doctor is giving you treatment, he is treating you, so he'll prescribe some medicines also. A pharma company is there. That pharma company will go to the doctor and tell that doctor that you will prescribe our medicines only, take 1 lakh rupees from us. Profession of doctor, medical profession is governed by IMA, Indian Medical Association, and the rules and regulation framed. The profession of chartered accountancy is governed by a law known as CA Act. CA Act, yes or no? So there is a law which tells the doctor that you are a doctor. Bloody don't try to become a businessman or don't try to exploit your patients. Whatever medicines are required, just prescribe those medicines and don't prescribe specific medicines of a specific company by taking commission etc. from the company. Giving such type of commission to the doctors is not illegal for pharma company. Pharma companies can give. But as per the Indian Medical Association rules and regulation, accepting such kind of commission to prescribe the medicines of specific pharma company is not allowed to the doctor. Doctors are not legally allowed to accept the amount and prescribe the medicines like this. Getting my point? Now that pharma company has given some commission to the doctors. Pharma company will say that, see, for us, it is our business. So to grow our business, we have to give the commission to the doctors. And we are giving the commission to the doctors to increase our sale. It is our business expense. We are going to take that deduction. Then the pharma company will say, to the pharma companies, the income tax department will say, explanation 3. Even if You have incurred some expense in the form of commission, which you are giving to doctors, but the doctor cannot legally accept that amount from you. Hence, the expenditure which you have incurred as a commission will be assumed as if it is not incurred for the purpose of business or profession, and that commission will not be allowed in the hands of pharma company. It will be disallowed. Got it, sir? Everyone, these three explanations you are supposed to keep in mind. Should I move ahead? 37.1 done. Now see, any losses which are incurred in the course of, they are also allowed as a deduction while calculating your business profits. Remember my first lecture of PGBP, direct method. We have to take all the incomes minus all the expenses. All the incomes, main income, incidental income, specific charge income, deemed PGBP income, add, less what? Deductions allowed under section 32, 37.1, we have completed. Now we are going to check that what are the things which are disallowed. Disallowances also we are going to see. These items of disallowances are not to be reduced. But last thing I wrote, any loss incurred in the course of your business or profession will also be reduced while computing your PGBP income. Under which section? Is there any section? Start remembering section 32, 36.1, where it was written that the loss incurred in the course of business or profession will be allowed as a deduction. Nowhere it was written. So can it be claimed as general deduction? 37.1. Bloody general deduction is available for. And what are you claiming? That is not expenditure. So you cannot claim it as per 37.1 also. There is no section which tells you to take the deduction for loss. Still those losses will be allowed as a deduction. And you will get the deduction. Why? Because without adjusting those losses, you cannot compute your profits and gains. The charge under this head is on profits and gains of your business. And profits and gains of your business cannot be computed without adjusting the losses. So to adjust them, to minus them from your business income, there is no specific provision which is required. Only common sense is required. I have already told you. And if you will ask a qualified chartered accountant also, no, that losses are allowed under the head PGBP, he will say yes. Losses incurred in the course of business or profession allowed under PGBP, that CA will say yes. You have to just ask him one question. As per which section? 30, no. 36, no. 35, no. He'll boldly take 37.1. Why? General deduction. Ask anyone. He'll give you this answer only. What are you supposed to do? You're supposed to laugh and go away. Don't tell him this logic. Huh? General? What 7 letters? Okay. Okay. I was not getting it. So okay, I will remember. So did you understand? Losses will be incurred in the course of. Are these losses also allowed while computing your PGBP income? The answer is yes. Under section 37.1, no? No section is there. Still the losses will be allowed because of common sense. Loss cannot be allowed under 37.1. Why? Because it is not expense. 37.1 gives you the deduction for expense. Yes or no? And it is not allowed under specific sections also. No section is required to claim these losses. Only common sense. Because charge under the head PGBP is on. And which cannot be computed without adjustment of such losses. Therefore, no section required for claiming deduction for such losses. Only common sense is required, which is very uncommon. Hello. Now, we have completed all the deductions. The second part of this chapter, considered to be the biggest part of the chapter, we have completed. Okay. Now, within some time, we are going to finish the disallowances also. And then we are going to start with the questions. 1 or 2 questions I told you that we'll solve, and that will 100% boost your confidence. Don't worry about it. Okay. Now see, one question I have. Have you heard about this thing? Tell me, huh? Any expenditure or depreciation on assets, these assets are exclusively used for your business or profession. Are these assets used anywhere else or only for business or profession? Full use of the asset is happening only for business, only for profession. Example, this projector. Is it used for my wedding? Or it is used only in the classroom, in the business? Yes or no? These speakers, used only in the business. This computer, hello, this benches and everything, all these assets which you are seeing around you are exclusively used for the purpose of business or profession. Now, if any such asset is exclusively used for the purpose of business or profession, any expense or depreciation on that full amount, what did I say? Full amount of this expense, full amount of that depreciation shall be allowed. Shall be allowed. Meaning the repair cost of this building, section 30. Repairs to this building, section, full amount will be allowed. Why? Because the building is used only for business or rates and taxes, full amount will be allowed under section 30. Repairs to this furniture, repairs to the plant and machinery will be fully allowed under section 31 because used exclusively for the purpose of business or profession. Their cost disallowed but came in the form of depreciation. Full amount of depreciation will be allowed because it is entirely exclusively used for the purpose of business or profession. Yes or no? But is it possible that the assets used for business or profession and for other purposes also? Tell me yes or no. If any asset is there, that asset can be used in the business also and it can be used for other purposes also. Or for example, if there is an asset, some part of the asset is used in the business and some part of the asset can be used for other purposes also. Now for this asset, if any expenditure or depreciation is there on this asset, tell me, should this entire amount of expenditure or depreciation be allowed? Or only the proportionate expense or depreciation which is related to business use? Yes or no? That proportionate expense or depreciation, out of this expense, the proportionate amount out of the depreciation, the proportionate amount which is related to use in business or profession, or related to use for other purposes. Tell me, which proportionate amount should be allowed? The proportionate amount which is related to use in business or profession shall only be allowed. The proportionate amount of expenditure or depreciation related to use for other purpose shall be allowed or shall not be allowed? That is disallowed, which is given in section 38. First disallowance over. Will you remember this? Yes or no? Next one. My next question. Can you incur expenditure for advertising your products and services? You are in a business. Hello, you are in a business or profession. You are dealing in some goods. You are dealing in some services. So definitely you would want to advertise or to promote the goods or services. Why? To attract more clients, more customers, so that the sales increase. Your business grows. So tell me, any advertisement expenditure which you will incur? Any advertisement expenditure which you will incur? Is it being incurred for the purpose of your business or profession? Yes. Advertisement, marketing, promotion expenses and all are your business expenses. Will be allowed or will not be allowed? Which section? 37(1). 37. Sir, I have got the advertisement of my products done in radio. Allowed. TV? Allowed. Magazines? Allowed. Newspapers? Allowed. Sir, I am getting my products advertised on the billboards. Allowed. Hoardings? Allowed. Anywhere you are getting the advertisement done, and on that advertisement you are incurring the expenditure, that is revenue in nature, will be allowed. Getting my point? But if you are incurring an expenditure on advertisements in the newspaper, pamphlet, brochure, souvenir, etc. of any political party, then as per section 37 to B, that will be disallowed. That will not be allowed as your business expense. That will be disallowed. Why? Because the expenditure incurred by you on advertisement in the newspaper, brochure, pamphlet, souvenirs, etc. of a political party is already considered as your contribution or donation to the political party. That amount is treated as your donation or contribution to the political party, for which you are already getting deduction under 80 GGB or GGC, and bloody now you will call that expenditure as your business expenditure and you will claim that deduction. Here also will not be allowed. As per 37 to B, it will be disallowed. Second disallowance. What? Expenditure incurred on advertisement. Advertisements in newspaper, brochure, magazines, pamphlets, souvenirs, etc. of any political party will not be allowed as a deduction under PGBP head. Why? Simple reason. It is considered as donation or contribution made by the assessee to the political party, eligible for deduction under 80 GGB or GGC. Got it, sir? Yes or no? Now pay attention. Can you do any capital expenditure? You are saying that you are incurring expenditure on advertisement, but that expenditure is not of revenue nature, that is capital in nature. And if it is capital in nature, you cannot claim it under section 37(1). You will say that it is an expenditure on my advertisement. I want to claim it as a deduction at one go from my business income right now only. But the department will say, no, this is not your normal advertisement expense of revenue nature. We are not going to give you any deduction right now at one go. Claim it in small parts in the form of depreciation. Any example you can give? See, Tambaram branch has been just now opened few months back. Now in the Tambaram branch, right now the work is going on. What work is going on? No. They are fixing the banners, which is usually outside KS premises. Yes or no? A big hoarding. So for that, they have fixed iron rods. Iron rods are fixed at one side of the gate and on the other side of the gate, and with this iron rods, other iron rods are fixed. Now this is a frame which is created. Now on this frame, the hoarding of KS class will come, which you might have seen in the AGR branch also, here also, downstairs also. This hoarding etc. which is being fixed, such type of expenditures will happen again and again, or only once. And once this expenditure is incurred, the hoarding is fixed. It can be a glow signboard also, it can be a normal hoarding also, yes or no? Now this hoarding will be used for number of years now. So it has a characteristic of asset. On this, whatever amount is spent, you are not going to spend these amounts on a regular basis. So it is a capital expenditure, not an expenditure of revenue nature. You cannot claim it under section 37(1). You are saying, no, see, we have fixed this hoarding, no. So every passerby will go from here, they'll come to know, KS Academy is there. Meaning, marketing is being done, advertisement is being done. Any CA student will be passing from here, they will come to know that this is a class where the CA coaching is going on. So by, looking at that hoarding, marketing is happening, advertisement is happening. But on that hoarding, whatever expenditure is happening is not of revenue nature. It is of, should be allowed fully or in small parts in the form of depreciation. Now tell me, that hoarding is building, then plant and machinery, it is furniture and fixtures, eligible for 10% depreciation. Will you remember this? So that is what I have written here. Please pay attention. See, assessee has incurred expenditure on, expenditure can be, and if that expenditure is for advertisement in newspaper, magazine, brochure, pamphlet etc. of a political party, it is a political donation or contribution, eligible under 80 GGB or GGC. It is not treated as your business expense, will not be allowed as a deduction. There is a section 37(2)(b) which disallows this. Yes or no? Any other revenue expenditure on advertisements will be allowed as a deduction under section 37(1), general deduction. Yes or no? But if expenditure on advertisements happens to be in capital nature, results into some asset, for example, signboards, hoardings are there, even that is an advertisement expense, but it is of capital nature, it results into an assets. So whatever expenditure done will not be allowed fully, rather that will be allowed in the form of depreciation, considering these items as what? Furniture and fittings. Eligible for what rate of depreciation? 10%. Will you remember? Sure. Now let's come to 40 clause A, subclause 1. We call it 40AI. We call it 40AI. Yes or no? Now in 40AI, what happens now? If you'll understand this section, next two sections will become very easy for you. Very easy. Understand this properly. If you are an assessee, you have incurred any business expense. Any expense means I'm talking about those expenses which are incurred in the course of your business or profession. It can be any type of expense. It can be commission, it can be interest, it can be rent, it can be royalty, it can be any type of expense. But other than salary, other than all these expenses are incurred by the assessee for his business or profession. Now for these business expenses, the assessee is making a payment outside India, or the payment is made to any non-resident or a foreign company. So for assessee, the payment is considered as his business expense. But for the opposite party, who is outside India, who is non-resident, who is a foreign company, for this opposite party, this payment for this expense is the taxable income for that person. Yes or no? And on that amount, on that taxable income, that opposite party is liable to pay tax in India. Will they come to India to pay tax? Non-resident, foreign company, persons outside India earning taxable income from India. On that income, they are liable to pay tax in India. Yes or no? Are they going to come to India? Can the government go there? No. But the government wants tax from them. So you are the only person who is going to collect that tax for us and give it to us. Because you are the person giving them that income. So the government has given you a responsibility to deduct the tax on their income which you are giving. Yes or no? And second responsibility, after deducting that tax, deposit that tax to the government on or before the due date of your filing ROI. Due date of filing your ROI, return of income. So two responsibilities are given. Number one, the TDS has to be deducted. Without TDS, you are not going to give that amount. Deduct the TDS. And the amount of TDS which you have deducted out of this payment, that TDS must be deposited by you to the account of the government on or before the due date of filing your ROI. Only then this payment will be treated as your business expense, and for that you are going to get the deduction under PGBP head. But if you have committed a default here, what default you can commit? You are liable to deduct TDS, but you did not deduct TDS. Yes or no? Or second default can be, you have deducted the TDS, but after deducting TDS, you have failed to deposit that TDS on or before your due date of filing ROI. So if there is a TDS default on this payment, then don't you think you have created a default? Yes or no? You have done something wrong. Now get ready for the punishment. Doing wrong, so get the punishment. What punishment you will get? The payment which you made, on that payment you are liable to deduct TDS. Did you deduct that TDS? Entire payment, 100% of that payment will be disallowed. That payment will not be treated as your business expense, even though it was your business expense. But since you have committed the TDS default, that payment will not be treated as your business expense. Entire payment will be disallowed. Hello? Second default, you have deducted TDS. Wow, wonderful, very good, very good. Now deposit that TDS on or before the due date of filing your due date is gone. You have not yet deposited that TDS. Default is done, no? So the payment on which you have deducted the TDS, but you have failed to deposit to the government, yes or no? That entire payment will not be treated as your business expense, will be disallowed. 40A I. Did you understand? You committed a mistake, and for that mistake, this is the punishment. Now wait. What if you rectify your mistake? Then the amount which we disallowed will now be allowed. Proviso. What mistake you committed? TDS you did not deduct. Then the payment on which the TDS was not deducted, that payment got disallowed. Do one thing. From the subsequent payments which you will make, deduct this TDS also. Hello? To that same party, in the future, you will make another payments, no? So from those another payments, deduct this TDS also. The TDS which you are going to deduct at that time, deduct that. But along with that, deduct this TDS also. Then, have you rectified your mistake? Have you rectified your mistake? No. Just deducting TDS is not enough. Deduct that TDS and deposit to the government. Then the year in which you will deduct and deposit that payment, deposit the TDS to the government, in that year, the amount which was disallowed right now will be allowed as a deduction. Yes or no? The year in which the TDS is deducted and deposited, in that year, the amount of disallowance will be allowed as a deduction. It will be allowed as a business expense for that year and not this year. Got it? Now, you deducted TDS in this year only, but you did not deposit the TDS on or before the due date of filing ROI of this year. Then the entire payment on which the TDS got deducted, but you could not deposit, that entire payment will be disallowed? Yes or no? Why? Because TDS was not deducted. No, it was deducted, but you could not deposit. So default was non-deposit. Default was deposit that TDS in whatever year the TDS will be deposited. In that year, the amount which is disallowed right now will be allowed as a deduction. Hello, sir. 40AI done. 40AI covers which payments? Payment for any expense other than which is made or to a non-resident or a. Now see what I have done, I have selected this entire page. Then after selecting, copy and paste. Entire page, paste. I have just changed the color and few details. If you'll see, handwriting is also same. Why? Because entire page is copy paste. Are you an assessee? Making payment for. There it was other than salary, here including salary. There the payment was made outside India or to non-resident or to foreign company. Here the payment is made to any. So there are certain payments. What payments? Any payments of your any business expense. On those payments, you are liable to deduct TDS because those payments are made to resident, and for that resident, the income is taxable income. So the government does not have any trust on these residents that they are going to come to the government, show their income taxable to the government. Yes or no? So they are not going to come easily in front of the government to offer their income for the purpose of taxability. But they are earning taxable income from you. So government has given you responsibility here also, that on certain payments you are required to deduct TDS. Deduct that TDS and deposit that TDS on or before the due date of filing your ROI. But you committed mistake here. What will happen? Then the payment on which TDS was not deducted, the payment on which the TDS was 100% of that payment? No, only 30% of such payment will be disallowed. Last time it was full payment disallowed. Now it is 30%. Why? Because the payment is done to resident. Yes or no? Everything remaining same. Even the proviso remains same. But only difference is all the business expenses are covered, including salary, provided the payment is made to resident. Yes or no? And the amount disallowed under 40IA will not be 100%. It will be only 30%. If there is a default, default of TDS, if the TDS is not deducted, or second default, if the TDS is deducted but not deposited on or before the due date of filing ROI. Done, sir. Later on can be allowed if the default is rectified. This entire amount which was disallowed right now, later on can be allowed if the default is rectified. TDS is deducted and deposited, or it was deposited. If it was already deducted, then it was deposited later on. That time the entire amount which is disallowed right now will be allowed. Will you remember this? Yes or no? Now wait, did I copy this? Same item, copy and again paste. Now are you an assessee? Making payment for any expense or salary expense? Salary was excluded from here, no? Why? Because it is covered under separate clause. For salary there is a separate clause. Yes or no? Now are you paying salary? Are you paying salary? outside India or to a non-resident, and that salary is a taxable income for that person. So on that salary also you were liable to deduct TDS and deposit that TDS to the government on or before the due date of filing your ROI. Did you deduct TDS? No. Default is there. Or you deducted TDS on salary but not deposited on or before the due date of filing your default is there. Now get ready to take the punishment. What is the punishment? Entire salary payment on which the TDS is not deducted. Entire salary payment on which the TDS is not deducted will be disallowed. Or entire salary payment on which the TDS is deducted but you have failed to deposit, that entire amount will be disallowed. Can you see any proviso here? Or there is a blank here? No proviso. No proviso meaning even if the default is rectified later on, no, the amount once disallowed under clause 3 will not be allowed again. This is permanent disallowance. Once it is disallowed, it is disallowed. Later on, if you, however you cry, later on, even if you deduct, even if you deposit, we are not going to listen. We are not going to again allow this amount. For other payments, we will allow, but for salary, we are very strict. We don't want you to give the salary without TDS. Yes or no? Hello. Clause number 2. Clause number. See, very easy. If you are earning any income, salary income, house property income, PGBP income, capital gain income or IFRS income, these incomes are liable for tax. Meaning the government will take income tax from you. On your salary income, the income tax is taken. House property also income tax is taken. Yes or no? Now simple thing, tell me, we are in which head? PGBP head. Under the head PGBP, what is chargeable to tax? What is chargeable to tax? Profits and gains. From what? From your business or? So you will say, no, these are not my profits and gains. These are the profits and gains of my, and on these profits, if the income tax is charged, then that income tax is an expense related to my business because it is a tax which is charged on the profit of my business. Can you hear yourself what bullshit you are uttering? And bloody, this bullshit is making some sense also. This is not my tax. No, income tax is not my tax. No, this is a tax on the profits of my business. So any tax on the profit of my business is my business expense. You want to claim it as a deduction. 40A2 disallowed. Even if it is a profit, even if it is a tax on the profits of your business or profession, still we are not going to allow you this. Why? Common sense. Bloody, just imagine if we'll allow you this, then everyone else will come. It is a tax on my salary income. Allow it under the head salary. Somebody will come having house property. It is a tax on my house property income. Paid out of my house property income. Allow it under house property head. People will come to claim the deduction for tax on capital gains income also. Tax on IFRS income also. Bloody, if we have to give you the deduction for income tax under the Income Tax Act, if we want to give you the deduction of income tax, why the bloody hell we are taking the income tax from you then? What is the, what logic it makes? Taking the income tax from you? Oh, expense, no? Take it as a deduction. Will it make any sense? It will not make any sense. But wait, the assessees engaged in the business or profession, assessees earning income from business or profession, profits they are earning, gains they are earning. On that profits and gain, if the income tax is charged, they might say a logical thing that these are not the tax, this is not the tax on myself, this is a tax on my profits of business or profession. So this becomes my business tax. This is a tax in the course of my business or profession. So they would ask the deduction for this. Then bloody we'll have to give the deduction for other taxes on other incomes also. Disallow here only. Disallow here only. 40A2. It will be this. See, other taxes which you pay in the course of your business or profession, which are not income tax. Like if you are buying and selling goods, you have to pay GST. If you are importing or exporting goods, you have to pay customs duty. If you are manufacturing certain items, still excise duty is there. Excise duty also you are supposed to pay. So these are known as your business taxes. Sometimes you have to pay professional taxes also, employment taxes also. These are known as business taxes. For these taxes which you incur in the course of doing your business or profession, we are going to give you deduction. But if you will ask this amount as your business tax, this is not your business tax. Even if it is a tax on the profit of your business, this is not your business tax, this is your personal income tax. This is your personal liability. Because income tax is a tax on person. Tax on persons. So this is not to be considered as a business expense. Even if you will say, we will disallow. Will you remember 40 clause A, subclause 2. Now tell me, this income tax you can pay in different ways. You can pay the income tax in the form of TDS TCS. You can pay the income tax in the form of advance tax. You can pay the income tax in the form of self-assessment tax. In whatever form you are paying your income tax, ultimately it is income tax only, no? Will not be allowed as a deduction under any of the provisions of Income Tax Act. Specifically, income tax paid on your profits of the business will also not be allowed as a deduction. Done, sir? Done, sir? Now, 40 clause A, subclause 2 is done. 40A2 is done. Yes or no, sir? Now, coming to 40A4. No need to do it. Forget it. One more section is there, 40A5. If you remember, I have already taught you this. 40A5. If you are an assessee in your business, some employees are there, you are giving them non-monetary perquisites. Tax on the non-monetary perquisite of your employee paid by you for the employees. It is not treated as taxable perquisite under the head salary, fully exempt under section 1010CC in the hands of employee. So you will call it as your business expense. Claim it under the head. Bloody, we don't allow you your income tax. Forget about giving you the deduction for income tax of others which you are paying. And if we start giving you the deduction for income tax on the non-monetary perquisite of your employee, how much income tax how much non-monetary perquisite your employee was earning? Example, 2 lakh rupees. How much was the non-monetary perquisite? You are not an employee, you are a businessman. You are giving non-monetary perquisite to your employees. How much non-monetary perquisite he is getting from you? 2 lakh. Is it your income or his income? On that income, he is liable to pay, example, 10% tax. How much? 20,000 rupees. So that 20,000, which was the income tax on his non-monetary income, you are paying from your pocket. How much you are paying? 20,000. That 20,000 for him, it is not his taxable income. It is not his taxable perquisite. Fully exempt. 1010CC. So you don't get a chance to claim that deduction under PGBP head. For you also it will be disallowed. That 20,000 you cannot claim as your business expense under the head PGBP. 40A5 disallows. Just imagine if this disallowance were not there. So that 20,000 would have been allowed? as your business expense? You would have started doing this business only. Yes. You will ask your employee, Macha, come here. Come now, come. How much is your non-monetary perquisite? Oh, 2 lakh rupees. Okay. How much is the tax on that? 20,000. See, if you will pay 20,000, no? If you will pay tax, you will have to pay 20,000. Yes or no? Do one thing. Give me 18,000. Give me. I will pay full 20,000 tax for you. Employer will pay full 20,000. Employee will become happy. Why? Because if he would have directly paid to the government, he would have to pay. But he gave me only 2,000 savings to the employee. See, 20,000 I am paying to the government for my employee. But I am recovering 18,000, no? How much is my expense? But I will get the deduction of 20,000. And that will reduce my tax liability by 6,000. 20,000, company is there, 30% tax rate. So my company's income will come down by 20,000. Because 20,000 is my expense, I will claim it as a deduction out of my business income. My business income will come down by 20,000. On that business income, I will save 30% tax, 6,000. To save 6,000, I can very well spend 2,000. Now all my employees, my dear employees, this your employer will give you discount. Come, everyone come. All your non-monetary perquisites, okay? You are not going to pay tax on your non-monetary perquisite. How much you are supposed to pay? 50,000? Don't pay. Give me 45. Give me, I will pay your full 50. So that I get deduction of 50. My business income will come down by 50. So 50,000 income come down, I'll save tax. 50,000 into 30%. 15,000 tax I will save just by incurring an expense of 5,000. Balance 45,000 I have received only, no? Hello. 10,000 tax saving. Just imagine I'll start doing it for all my employees. If this disallowance was not there, every employer would have done that only. Hence, 40A5. Will you remember this? Hello? So, 40 clause A over. 40 clause A over. Now let's come to 40 clause B. Very important section. This time there is an amendment here. The limits are changed. See, I have already explained. You that a partner receiving interest from partnership firm, a partner receiving interest from partnership, or partner receiving remuneration from partnership firm, it is an income for the partner. Under the head PGBP. Specific charge is there, yes or no? But it will be treated as income in the hands of partner only to the extent allowable in the hands of firm, allowed in the hands of firm. How much will be allowed in the hands of partnership firm and how much will be disallowed is given in 40 clause B. Now this 40 clause B, we are not doing with the point of view of partner. We are doing with the point of view of a partnership firm. So become a partnership firm and think, are you a partnership firm? Giving interest on loan or interest on capital to your partner? Is it your expense? Is it your expense? Will it be allowed? No. If it is not authorized by partnership deed, it will not be allowed. You want to claim it as a deduction? No. Firm. Hello firm. Partnership firm. You want to claim this interest as a deduction, as an expense? Yes or no? It has to be authorized by deed. Has your deed authorized? No. Then why are you giving? Even if you are giving, full amount will be disallowed. Oh, deed has authorized. Then you will get the deduction. Then you will get the... But wait, how much the deed has authorized? Deed has authorized 10%, no problem, genuine. Oh, deed has authorized 12%, no problem, genuine. Ayyo, deed has authorized 20%. Bloody your deed can authorize 100% also. So what do you think? That whatever amount your deed will authorize, That entire amount we should give you as a deduction? No. Only to the extent of maximum 12%. Only to the extent of maximum. So two conditions are important. Number one, firm giving interest on capital, firm giving interest on loan to the partner, that will be treated as an expense, will be allowed in the hands of firm only if that interest is authorized by deed. Sir, firm is giving 12% interest, fully allowed. 10% interest, fully allowed. More than 12%, up to 12% it will be allowed, excess will be disallowed. Yes or no? Provided that interest is authorized by deed. Now, if the firm is giving 9% interest, if the firm is giving, will it be allowed or it will be disallowed? Depends. Authorized by deed or not. If the deed is not authorizing, then whether it is less than 12%, equal to 12%, more than 12%, entire interest will be disallowed. But if the deed has authorized, the deed has, and the interest is 9%, will be allowed fully. Interest is 12%, will be allowed fully. But the interest is 18%. Up to 12% it will be allowed and excess will be disallowed. Now, let's take one example. The interest given by the partnership firm was, what is the rate? So, at the rate of 15%, 3 lakh interest is given. And assuming that the interest is authorized by deed. Yes or no? Now tell me, if at 15% 3 lakh is given, 12% how much should have been the interest? 2 lakh 40. Cross multiplication. If 15% is 3 lakh, how much should be 12%? Can you do a cross multiplication? Many students, smart students, what they will do, instead of cross multiplying, they will calculate 12% of 3 lakhs. Seriously. Some amount is there. On that amount, 15% is 3 lakhs. So on that amount, 12% should be allowed. 12% of 3 lakh is not allowed. Hello. Meaning, if the interest is 3 lakh at the rate of, so what should be the principal? What should be the loan? 3 lakh divided by 15 into 100. Calculate 20 lakhs. On that 20 lakh, calculate 12%. Hello? But in the question, they have not given you 20 lakh. You'll have to do the reverse calculation. So instead of calculating 20 lakh, then again calculating 12% on that, apply your logic. On some amount, 15% is 3 lakh. On that same amount, 12% should be how much? Cross multiplication. If 15% is 3 lakh, 12% is how much? 2 lakh 40,000. Now tell me, 3 lakh is given. 3 lakh will be allowed or not allowed? Now think from the point of view of the firm. This is the P&L account of the firm. Debit side, the firm has written interest to partners. How much? And after that, net profit is calculated. Net profit is, so while calculating net profit, interest is already debited. Interest is already how much? My question is, this 3 lakh is debited at 15%. Is it allowed? Is it allowed? This is not allowed. Add back to the profit. Add back to the, how much is allowed? Is that 2 lakh 40 recorded? Unrecorded business expense. Reduce 2 lakh 40. Add 3 lakhs. Reduce 2 lakh 40. Why 3 lakh? Apply your mind. 3 lakh which was debited in P&L is at the rate of 15%. That is not allowed as a deduction. If that is not allowed as a deduction, debited to P&L, I will have to add back. So 3 lakh which was not allowed has to be added back. How much is allowed? That I have calculated separately, and that amount was not debited. Hello? The amount which is allowable under the head PGBP, 2 lakh 40, is this amount recorded or not recorded? UBE, unrecorded business expense. Reduce it. Add 3 lakh, reduce 2 lakh 40. Add 3 lakh, reduce 2 lakh 40. Now somebody will tell me, being smart, that sir, instead of doing this, we'll take the net amount of 60 and we'll add 60 only, no? Your answer is correct. But in the examination, no, you all don't be this much smart. Instead of adding 60, what if you'll reduce 60? Oh, do I have to add it or do I have to less it? Hello? First of all, tell me, if this was the case, okay, no? 3 lakh was the interest. What was the maximum interest? Okay, now I'll put you in some trouble. See, interest is given at what rate? How much? 3 lakh. How much should have been the interest at 12%? Calculate now. 4 lakh 80. Hello? Now last time what you did? 3 lakh minus 2 lakh 40, 60,000 you have added. Now what you will do? 3 lakh minus 1 lakh, 4 lakh 80, 1.8 lakh difference, sir. What will you do with this? Confusion ही confusion है, solution कुछ पता नहीं. Hello? So don't be, over smart. If the things are happening straight, no, keep it straight and simple. 3 lakh was recorded in P&L. Reduced while calculating the profit. Is this 3 lakh allowable? No, because it is calculated at the rate of 15%. Not allowed. So why you have reduced from profit? Add back. Hello? How much is allowable? 2 lakh. That you have calculated separately. And this 2 lakh 40 was not recorded in P&L. Hello? Reduce it separately as your unrecorded business expense. So if you will add 3 lakh and you will reduce 2 lakh 40, no, automatically that 60 will be added. No need to give any net effect. I will kill you. I'll come in the exam hall and then and that time I will start hitting you. Add 3 lakh less 2 lakh 40. Add 3 lakh less. Whatever you see in the solution everywhere else, you will follow this only. Got it, sir? Now wait. If that interest was calculated at how much? No need to calculate 12% also. Bloody you were calculating 12%. Interest is credited at what rate? Which is a rate lower than entire interest is supposed to be reduced. It is reduced. No need to give any effect. No need to add back. It was allowed only. And you have taken the deduction also. That's it. Calculating 4.8 lakh, calculating the difference, maximum limit and this and that. Why are you complicating the things? Will you remember this? Sure. Interest done. Now, what was in our example? Tell me. How much interest the firm gave? How much interest the firm gave? 3 lakhs. 3 lakhs the firm gave. Out of 3 lakh, 2.4 lakhs allowed. And 0.6 lakh means 60,000 disallowed. Yes or no? Meaning, what happened, Out of the business income of the firm, 3 lakh was removed. And 3 lakh was added and 2 lakh 40 was removed. Meaning that 2 lakh 40 is reduced out of the profit of the firm. And 60,000 is again added to the profit of the firm. Getting my point? So how much profit of the firm came down? And how much got increased? On that 60, the firm has already paid tax. And on that 2 lakh 40, which was reduced from the profits of the firm, on that 240, the firm has not paid. So the amount on which the firm has not paid tax should be taxable in the hands of partner. Should be taxable in the hands of. Now see, how much the partner will get? How much the partner? The firm is giving 3 lakhs, so partner will get. But out of this 3 lakh, how much was allowed in the hands of firm? 2.4 lakh. This will be taxable as PGBP income for the partner. How much was not allowed in the hands of firm? This will be ignored. This is not treated as income in the hands of partner. Ignore. Will you remember? Okay. Now let's see. Now I am talking about remuneration. What? Remuneration given by? To? Allowed as an expense or not allowed? Allowed or not allowed? If it is authorized by partnership deed, then it will be allowed. Hello? Then it will be. But partnership deed is saying that the remuneration should be paid to non-working partners also. Does it make any sense that the partner who is not working, he is getting remuneration for working? Your deed can authorize to give the remuneration to non-working partners also. Under the Income Tax Act, you will not get any deduction for the remuneration which you have paid to non-working partners, because they are not working to get this remuneration. Then why are you giving? Oh, my deed is saying. Let your deed say anything. Deed is mad. We are not mad. Deed is saying to pay the remuneration to working partner. Yes, that we are going to allow. But if your deed is saying to give the remuneration to non-working partner, that we are not going to allow. Yes or no? Any remuneration given to non-working partner, whether the deed is allowing or not allowing, will be fully disallowed. Yes or no? Any remuneration given to working partner will be allowed or will not be allowed? Will be allowed only if it is authorized by deed. Now deed can authorize any amount. So should we allow any amount? There has to be a limit on remuneration also. Just like there was a remuneration on, limit on interest, so there will be a limit on remuneration also. Because your deed can bloody authorize that you should pay the entire profits in the form of what? Remuneration. No. We will tell you that how much remuneration should be given to the working partners altogether. Yes or no? So now you will have to calculate this limit. This limit is directly not given. For interest, 12% limit was directly given. Yes or no? But for remuneration, limit is not given. That limit will have to calculate. This limit will have to. Now pay attention. To calculate this maximum limit of remuneration to working partners given under section, first you will have to calculate the book profit of the partnership firm. What are you going to calculate? Book profit of. Now, if that book profit of the partnership firm is up to 6 lakhs, then on that book profit, 90% or 3 lakhs. Earlier this limit was 3 lakhs. Now this limit has been doubled. Book profit up to 3 lakh. No. Book profit up to 6 lakhs. 90% of that book profit or 3 lakhs. Earlier this 3 lakh used to be 1 lakh 50. So what you are going to calculate? Calculate book profit. Calculate book profit up to 6 lakh, 90% of that. Or 3 lakhs, whichever is higher. Let's take one example. Your book profit was only 4 lakhs. Within the limit of 6 lakh only. Hello. So book profit was 4 lakhs. So any book profit up to 6 lakh, on that you are supposed to calculate 90%. So on 4 lakh, you will calculate 90%. 90% of 4 lakh will be 3 lakh 60 or 3 lakh, whichever is higher. 3 lakh. So if the book profit of the firm is 4 lakh, that firm can give maximum remuneration of 3 lakh 60. Yes or no? To all the working partners taken together. Now what if the book profit of the partnership firm was 3 lakhs? Book profit was only 3 lakhs. Within the limit of 6 only, no? On that calculate 90%. Calculate 2,70,000 or 3 lakhs. Whichever is 3 lakh rupees. Yes or no? Wait. If the book profit is 1,80,000. Book profit is 90% of that. Calculate 90% of that. 1,62,000 or 3 lakh. Whichever is 3 lakh will be the remuneration, maximum remuneration. What if book profit is only 1 lakh? 1 lakh into 90%, 90,000 or 3 lakh, whichever is 3 lakh. What if there is a book loss of 2 lakhs? Book loss of 2 lakh, calculate 90%, negative 1,80,000. Negative 1,80,000 or whichever is, minimum 3 lakh will be available. What did I say? Minimum 3 lakh is available or any higher amount. Getting my point? Hello, sir. But what if your book profit was 10 lakhs? Possible, not possible? So on the first 6 lakh of book profit, you are going to calculate, which will be 5,40,000. 5,40,000 or 3 lakh, whichever is 5,40,000. And how much is the book profit in excess of 6 lakh? 4 lakh. On the excess book profit, you will calculate 60%. That is 2,40,000. 2,40,000 and 5,40,000. 7,80,000. So if the book profit is 10 lakh, then 7,80,000 should be the maximum remuneration to all the working partners. Will you be able to calculate? This is the revised limit, and you can get a small question, MCQ question on this concept, 2 marks. Don't leave it if it comes. But sir, to calculate the maximum remuneration like this, we'll have to first calculate the book profit of the firm. No, very easy. Book profit is nothing but PGBP income of the firm without taking the deduction for remuneration. Because bloody remuneration only you are finding out. Hello? So without taking the remuneration, calculate the PGBP income of the firm. That is nothing but book profit. So what is PGBP income of the firm? PGBP income of the firm, all the business income of the firm, all the business expenses of the firm, yes or no? Meaning net profit calculated as per PGBP provision. Take the deduction for depreciation also as per Income Tax Act, and take the deduction for interest to partners to the extent it is allowed. But don't take the deduction for remuneration. Without taking the deduction for remuneration, this is the PGBP income of the partnership firm, which is nothing but book profit. Will you be able to calculate? Yes or no? Now calculate this book profit. First 6 lakh, 90% or 3 lakh, whichever is higher, and the balance book profit over and above 6 lakh, on that calculate 60%. Done. Done, sir. Now example, example I am taking. Pay attention. This is firm. Sir, this is firm. Firm is giving something to partner. Which partner? Working partners. Yes or no? Now the firm is giving remuneration. What the firm is giving? Now the firm has given 8 lakh rupees of remuneration. How much? Now let's see if 8 lakh rupees of remuneration is given by the firm, and maximum limit of remuneration you calculated, maximum limit. Okay, for that you had to calculate book profit. You had to calculate. So you calculate book profit. Book profit was 5 lakhs. Or let's say book profit was 7 lakhs. Book profit was first 6 lakh, 90%. That is 5 lakh. And definitely this will be higher than 3 lakhs. So we are going to take this amount only. Okay. On balance 1 lakh, you will calculate. So it will be 60,000 plus 5 lakh 40. 6 lakhs. So the maximum limit is, so out of 8 lakh, 6 lakh will be allowed and 2 lakh will be, on this 2 lakh, it will be added to the profit of the firm. On that, firm will pay the tax. And the 6 lakh will be reduced out of the profit of the firm. On that, the firm is not going to pay tax. Now tell me, how much amount the partners will get? 8 lakhs. Out of that 8 lakh, how much was allowed in the hands of partnership firm? 6 lakh will be treated as income in the hands of partner. And how much is disallowed? 2 lakh. That will not be treated as income. Ignore. Hello, sir. Easy. Now, if the partnership firm is giving share of profit to the partner, even that will be expense for the partnership firm, no? Appropriation of profit, and that will not be treated as taxable income in the hands of partner, fully exempt. 10(2)(a), if you remember, 10(2)(a), as per 10(2)(a), it will be fully exempt. I have already told you all these things. So with this, 40 clause B is over. 40 clause B is. Now let's come to 40(a)(2). 40(a), if you are an assessee, for your business or profession you have incurred any expense for your business or profession. This expense was available as a deduction. And now for this expense you are making any payment. And if that payment is made to a related party, then remember that payment is also allowed as a deduction. Under the Income Tax Act, if the payment for business expense is made to outsider, then also it is allowed, and payment for business expense made to related party is also allowed. But if it is made to a related party, then the amount should be reasonable. It should not be more than the reasonable amount. If the same payment you would have given to outsiders, the amount would have been 3 lakhs. How much you are paying? 10 lakh rupees. Because you have made the payment to related party. How much excess you have paid? 40(a)(2) will be attracted and it will be disallowed. You have paid commission to one of your related party. You have paid commission to one of your related party. 55,000. How much? If that same commission you would have given to someone else, it would have been only 20,000. Have you paid excess? How much? That will be disallowed. So how much is excess? How much is fair amount? Yes or no? Reasonable amount? You are not supposed to worry about that. That will be given in the question. And how that amount is fair amount, how that amount is determined, that is the judgment of the assessing officer. That if you are a businessman incurring this type of expense in your business, then how much is your business need? What is the scale of your business? What are the scale of your operations? What type of business you are having? In that business, such type of expense might happen or not happen. Many things, many factors will be kept in mind before assessing. So at the time of assessment, the assessing officer determines based on various factors that how much amount should be a fair or reasonable amount which you should have given to this party. And that amount he will determine only if the payments are done for business expenses to related parties. To non-related parties, if the payment are done, then those are reasonable only. But if to related party, he'll come to know that every month a commission amount is going to your brother. What is your name? Your name is Umang Thakkar. Oh, and every month one payment is made to one person whose name is Rahul Thakkar. Thakkar. Some tension. Immediately the income tax officer, while scrutinizing my return, he will ask for this expense. This expense every month you are making to whom? I will show my bank statement. In my bank statement, it will appear that every month the payment is happening to some Rahul Thakkar. He will ask, you are also Thakkar, he is also Thakkar. What is that? What is the connection between Thakkar? I will say, connection is, he is my brother. Oh, brother. Why are you making payment to your brother? Sir, simple, sir. I, bring customers or clients through agents. And if some agent is bringing clients to me, I give commission to those agents. Yes or no? Now, instead of engaging some other persons as agent, I have engaged my brother only to bring clients as my agent, and I am making the payment to them. Oh, So to your brother, you are giving commission. Very good, very good. How much commission? 25%. Let's check. During this year, have you given commission to others? Yes. To this fellow, you have given only 10%. To this fellow, you have given only 3%. To this fellow, you are giving 5%. On an average, 5 to 7% commission or maximum 10% commission you have given to outsiders. Bloody, to your brother you are giving? 25%. Doubt will arise or not? He will immediately ask, why are you giving 25% to your brother? Sir, he is my brother. No, we are telling you that why you are giving. You will tell your brother that, bro, the rate of commission is 10%, the maximum which I am giving to everyone. So I will give you also 10%. Extra amount, whatever I will give, no, withdraw that amount in cash and give it back to me. Keep some extra amount for that. By doing that, you will claim more amount as a deduction under the head PGBP. You can do it in the case of related parties. So we should be careful in that. Getting my point? So logic I have told you. Now magic. Are you an assessee? Are you making payments for any of your business expenses? Payment is made to related party. Payment is made to, and if that payment is unreasonable or it is more than the reasonable amount, then whatever amount which is unreasonable or excess will be disallowed. Yes or no? Now tell me, who is a related party? For me, is he a related party? Is this madam a related party? Then who will be a related party for me? No. Number one, my relatives. Or a concern where myself or my relative will have substantial interest. So this is my related party, this is my related party. If I have made excess payment to my related party, only then 48(2) will be attracted, only in these cases. Who is my relative? Not defined under 48(2). So I will have to take the definition from Income Tax Act, definition section, section 2, subsection 41. The relatives are defined under 241. Because who will be the relative for 48(2) is not defined here. So I went to 241, I brought this relative list. Under the Income Tax Act, they are treated as your relative. For gift provision, relatives are specifically defined in gift provision. Let me remind you, in this provision, since the relative are not specifically defined, I will have to take the help of section 2. Getting my point? So who is my relative? Brother, sister, Los Angeles, lineal ascendant, LD, lineal descendant. So lineal ascendant means my earlier generations. Lineal descendant, generations after me. Yes or no? My kids, they are my lineal descendant. See, if any of them are there, they are my relatives. So if I am an assessee, if I am an individual assessee, I have made the payment to these relatives, yes or no? And if that payment is excess payment, more than the reasonable amount, yes or no? Then that excess payment will be disallowed. 48(2) will be attracted only if the payment is made to these relatives. Because these relatives are treated as my related party. Now, if the payment is made to some concern, where I have substantial interest or my relatives can also have substantial interest. There is a partnership form in which I am a partner having 50% profit share, meaning 20% or more profit sharing. I am having a substantial interest. That partnership form, that concern is a concern where I have a substantial interest. Related party. Oh, I am not a partner in that partnership form. My brother is a partner. Then also that partnership form is a related party. Because my brother is having substantial interest. So either my relative or myself, any of us having substantial interest in the concern, yes or no, then that concern will also be treated as a related party. Any payment made by me to this concern should be within the limit of reasonable amount. If it is more than reasonable amount, the excess amount will be disallowed. Yes or no? Now for assessees who are HUF, AOP, BY and firm or company, member of HUF, AOP, BY, partner of firm or director of the company are related party, or any relative of such member, partner or director will be also treated as related party, or any concern where the assessee, his member, partner, director or any of the relative of such member, partner, director are having substantial interest. So in the concern, assessee can have substantial interest? Yes. In this concern, assessees, member, partner or director can also have substantial interest? Yes. And any relative of member, partner, relative of partner, relative of director, this relative can also have a substantial interest in this concern. Then this concern will also be treated as my related party. So if the payment is made to member, partner, director, payment is made to relative of such member, partner, director, payment is made to a concern where the assessee, member, partner of the member, partner, director of the assessee or relative of the member, partner, director of the assessee are having substantial interest, then all of them are treated as what? Related party. And to these related parties, if the payments are made, must be within the limits of reasonable amount. Any excess payment made, then that excess payment will be covered by 40A2, it will be disallowed. Will you remember this? This was 40A2. Now let's come to 40A3. Very easy. Try to recollect something like this we have already done. When we did the definition of actual cost, proviso to section 43(1), if actual cost of the asset, payment for actual cost of the asset is made, payment for actual cost of the asset is made, and the payment is more than 10,000, the payment is made in a day to a person, and the payment should be single payment more than 10,000, payment should be multiple payments in a day, and the aggregate of those multiple payments in a day is more than, and if those payments are made by way of any mode other than prescribed modes, then the actual cost to the extent of that payment will be ignored. That payment will not be treated as actual cost of the asset. So this same thing you have seen for capital expenditure. Same thing you have seen for capital expenditure, meaning the cost of the asset. In the business, that is the only expenditure which happens, or other revenue expenditures are also happening, like salary to employees, rent paid for the premises, rent, etc., advertisement, electricity, many expenditures of revenue nature other than capital expenditure are also happening in the business. Now, the expenditure which is related to business or profession, other than any expenditure related to my other than, and for that expenditure, if the payment is made in a day to a person, payment is more than 10,000, payment is more than, then if that payment is made otherwise than by prescribed modes, then such payment will not be treated as my business expense, and that such payment will be disallowed. For other business payments also, that same limit is there, which was there for payment for actual cost, payment for capital expenditure. Yes or no? So all the payments other than capital expenditures, payment for all the expenses other than capital expenditure, up to 10,000, up to, whether paid in cash or paid in any mode, it will be allowed. But if the payment is more than 10,000, then it will be allowed only if it is made by way of prescribed modes. Yes or no? Up to any modes it will be allowed. Whether even if it is paid in cash, still it will be allowed. Yes or no? But see, this limit of 10,000 will be increased to 35,000. Will be increased to, if the payment is made for transport expenses, freight expenses to the transporter. And if you'll see here, if the assessee is making payment for any expense, no, he is making payment for transport or freight charges to a, then limit of 10,000 will not be applicable. Limit of up to 35,000, any mode we will allow. Transport charges up to 35,000 paid to the transporter, any mode will allow. But if those transport charges are paid more than 35,000 in a day to a transporter, has to be paid by way of prescribed modes. So can I say payment more than 35,000 through prescribed modes only? But if the payment is up to 35,000 to transporter, then it can be made by any mode. Will you remember this? Hello, sir. Now, pay attention. Important thing I am going to discuss here. Okay. Wait, this entire thing I will discuss in the new page. You are an assessee. Who are you, sir? Sir, you are an assessee. You can be any person. Now you have incurred any expense for the purpose of your business or profession. For the purpose of your business or profession, any expense you have incurred. Now this expense is incurred in the last previous year. For example, it was incurred in previous year 23-24. Expense for which year? This year or last year? Expense for this year or last year? So for the last year the expense was incurred, and assessee was following mercantile system. Which system? Mercantile system of accounting. So this expense would have definitely been allowed in the last year only. This expense was unpaid. The payment was done or payment was not done. It was payable. Last year it was payable. Payment was not done. Still, what did I say? Still, the deduction was allowed in the last year. Why? Because the assessee was following. Yes or no? Now in future, meaning in this year, the payment for this expense will happen. The expense which was already allowed. The expense which was already on due basis. Cannot be disallowed under section 40A(3). 40A(3) comes in the picture only if the expense is incurred and deduction is yet to be taken. Deduction is not yet taken. Deduction is not yet. Expense for this year. Deduction you are supposed to take. Yes or no? But before taking the deduction, you came to know that the payment was done other than prescribed modes. Then 40A(3) will attract. And 40A(3) will tell you that no, you cannot take the deduction. Even if the expense is for this year, you cannot take the deduction in this year. This expense will be disallowed. Why? Because the payment you have done through other modes, other than prescribed mode. Payment was more than 10,000, more than 35,000, you have paid through any modes other than prescribed. Deduction is yet to be taken for the expense. And before that you have made the payment. Yes or no? Then 40A(3) will attract. Here, deduction is yet to be taken. or deduction is already taken. Without making the payment in a year, you have got the deduction. Why? Mercantile basis. Now tell me, for this expense which was already allowed as a deduction in 23, 24. In 23, now the payment will be made. What will be made? In your previous year, 24, 25. And the payment is more than 10,000, or if the payment was for transport charges, the payment is more than 35,000. And if this payment is made other than, now tell me, will this payment be disallowed under section 40A3? No, 40A3 cannot be applied to a payment which is already allowed. So now everyone will start doing it. Claim the expenses on due basis. And later on, even if you have not made the payment, you will tell the department that we have made the payment. What is the evidence? No need of evidence. We have paid in cash. Oh, we will disallow. How can you disallow, bloody? You have already allowed. And you cannot invoke section 40A3 if the payment is already allowed to us. So they came up with a new subsection. If any expense already allowed as a deduction, if any expense on due basis, for that expense also later on the payment is more than 10,000 or more than, and if that payment is made other than, 40A3 cannot be invoked here. So here there will be a new section 40A3A which says that any payment, what did I say? Any payment which was more than 10,000, more than 35,000 made other than prescribed, and this payment was towards that expense which was already allowed as a, then this payment expenditure to the extent of this payment will now be treated as deemed PGBP. Deemed PGBP income. First, you have taken the deduction from us, no? No problem. We told you to make the payment by way of prescribed modes. Did you make the payment through prescribed modes? No. Since we cannot apply 40A3, but we'll have to do the reversal. So to do that reversal, to disallow this item, what we are going to do now? We are consider that payment as your deemed PGBP income. This way, the deduction is disallowed. First the deduction was given and now that is taken back. But it cannot be taken back by applying 40A3 because that applies only if the deduction is yet to be taken. Will not be allowed as a deduction. Disallowed. If the deduction was not taken, then the deduction cannot be allowed. Yes or no? As per 40A3. But once the deduction was already taken, then you cannot say that we will disallow. Bloody, how will you disallow something which you have already allowed? Why are two talks you are doing? Once you are saying, no, due basis, no, we'll allow. So you have allowed. And now, since you have made the payment by way of any mode other than prescribed modes, then you are saying disallowed. How can you bloody disallow something which you have already? And since you have already allowed, now you cannot disallow by following 40A3. So 40A3 will not be applicable. So the assessees were fooling the government like this. So they came up with 40A3A. To disallow that payment, they introduced 40A3A and reversed that amount, which was already allowed. Reversed that amount, treating that amount as deemed PGBP income. Hello, sir. But for doing this, the payment should be made for an expense which was already allowed. And that payment is more than the prescribed limits, more than 10,000, more than 35,000 and other than prescribed modes. Then that entire payment will be treated as deemed PGBP income. Will you remember? Here also the limit for transporter is 35,000. Now my question is, do you remember the proviso to 43.1? Proviso to 43.1. There also 10,000 limit was there, no? Actual cost of the asset in a day to a person. In a day, more than, other than prescribed modes, will be treated as actual cost or will not be treated as actual. There only one limit was there. There only, that was 10,000. 35,000 limit of transporter. Will it be applicable there or it will not be applicable there? Yes. See, you add the transport and freight charges in the actual cost. In the actual cost of your asset, what is the actual cost? Purchase price, loading, unloading charges, and you add the transportation and freight charges also, no? So in your actual cost, transportation and freight charges is also there. And for that transportation and freight charges, if you are making the payment in cash, what should be the limit? Will you take 35,000 over there? No. 35,000 limit is only for 40A3 and 40A3A. And if the transportation charges was paid for bringing the asset to the existing location, then that transportation charges is not your expenditure. It is a part of your actual cost. For that transportation charges which was a part of your actual cost, limit of 35,000 is not applicable. Limit of 10,000 you will see. Just you thank God that I don't set the papers. I will put all these things in the question. From one point, if you will be saved, no, you will be definitely get stuck on the second point. Second hurdle also you will cross, no, you will definitely get stuck in third hurdle. 4 to 5 points will be such points in my question, no, which will compel you to, commit silly errors. If you dodge all those points, no, 100% you will get full marks. And these students deserve to pass in the exams. Getting my point? Just knowing that this will be asked, this will not be asked, this will be asked, this will not be asked. Go and write the vomiting in the paper and get passed. What is the benefit of passing like this? If you don't have knowledge. Getting my point? Okay. Whatever it may be. Now see, there is one rule. There is one rule. Rule 6DD. What rule? Now for this rule, no, in this rule, there are certain situations. Situations or cases. Situations or cases. In these situations or cases, even if the payment is more than 10,000, more than 35,000, 40A3 and 40A3A will not be applicable. Meaning there will be no disallowance, there will be no deemed PGBP income. All are genuine cases. Here, even if the payments are more than 10,000 or more than 35,000, still the entire payment will be allowed as a deduction, as your business expense. Even if the payments are not made through prescribed modes, still it will be allowed as a deduction. It will not be disallowed. It will not be treated as deemed PGBP income. But those genuine cases, those cases are given in Rule 6DD. And for this Rule 6DD, you are going to, check ICAI, study material. I'll tell you the page number also. Yes or no? Look at the page number 3.26 on your ICAI study mat. On that page number 3.276, Rule 6DD is given. Okay. I will give you 1 or 2 examples. I cannot teach you all the cases. Yes or no? Otherwise, it will take too much time. For example, for your business or profession, you incurred some expense. You incurred some. And now, the amount of that expenditure is more than 10,000, more than, or it may be if the expenditure is transportation charges, the payment amount is more than 35,000. You have to make this payment through. And what are the prescribed modes, you know? Account pay check, account pay draft, ECS, NEFT, RTGS, BHIM UPI, other UPI. Some modes are prescribed. But you made the payment by swiping credit card. You made the payment by swiping debit card or credit card. Rule 6DD says, okay, no problem. No disallowance will be attracted. Why? Why? Because the payment is genuine. Swiping a debit card, swiping a credit card, made the payment is made to whose account will be clear from the bank records. Understanding? From your account the money is gone, it will be proved. And in whose account the money has gone, it will also be proved. So no need to harass the assessee in this case. No need to apply 40A3, 40A3A. Even that payment will be allowed. For example, you are buying some agricultural produce from a farmer. Can you buy agricultural produce? Oh, in your business you will require agricultural produce. Give me one example of such business. Coffee shop, coffee, very good. Then I'm in the business of manufacturing Ashirwad Atta. What I am manufacturing? Manufacturing Ashirwad Atta. So to manufacture Ashirwad Atta, I will require atta or I will require wheat. Not weed. Wheat. Gehu. So that wheat I will buy from. I am a manufacturer. I am not the grower. I am not the cultivator of wheat. So I will find out some agriculturist. I will find out some agriculturist means a cultivator nearby my factory. There are so many wheat fields. Yes or no? I will go and catch any farmer. That farmer. I am a manufacturer of atta. Ashirwad atta, wheat flour. So to manufacture that wheat flour, I want wheat. Can you please give me wheat? He will be very happy to get a big customer like me. Entire wheat, he will not have to go and sell in the market. I will take the entire wheat from him. Can I say I am buying my raw material for my manufacturing business? From whom I am buying? Farmer. Usually farmers in India are poor. They are not that much literate. They may or may not be having bank accounts. Now I am buying from a farmer agricultural produce for my business, and I will tell him, how much is the cost of the wheat which you are going to tell me? He will say, sir, entire field harvested, all the wheat given to you, 5 lakh rupees, sir. 3 acres of farm, entire wheat harvested and given it to me as my raw material. Am I buying a raw material for 5 lakhs? I will prepare an account pay check. What is your name? Ramu. Cross check? No, account pay check. Cross and in between account pay. Ramu, what is your bank? Give me your bank details. Give me your IFSC details. I will do NEFT. Ramu will be like this. What he is saying, I don't know. Ramu will say, Anna, from next time, don't come to buy wheat from me. It appears that you have done weed. Asking for these details, I have not heard only. There are many villages here where the farmers are farming and they might not be having access to the banks. They might not be having bank accounts. So now this poor fellow is making the payment for business expense. He has to compulsorily pay by way of account pay check. Otherwise this entire payment will be disallowed. And that poor fellow He cannot accept in check, etc. or prescribed modes because there is no bank account. Rule 6DD says no problem. Make the payment by way of any mode, the payment will be allowed. Because this is a genuine case. Getting my point? Likewise, there are many cases over there. Okay. Today itself, read that entire Rule 6DD. If you leave it at your risk. I'm telling you, it will be dangerous. Many times they have exploited Rule 6DD exception. What they will tell you, in the question they will tell you the payment is made in cash. Amount is more than 10,000. And you will start jumping. Ayyo, 48.3, you will disallow or you will consider deemed PGBP income. Bloody, that point which was given was covered in Rule 6DD exception. 48.3 was not supposed to be applied. The amount was allowed. And what you did? Disallowed. Gone. And that will happen if you will not read that Rule 6DD. Today itself, finish that. And if in any point you are getting any difficulty, ask me tomorrow. Hello sir, should I move ahead? Rule 6DD done, 48.3 done, 48.3 done. Now 48.7. If you will tell me to explain this, what I will say, I will not explain because I have already explained this. 48.9, I have already explained this also. Contribution to unapproved gratuity fund. Contribution to non-statutory fund or schemes for the employees. 48.9. Yesterday only I have discussed both these points. You'll go home and read them today. Okay? Because both the things I have covered. Next one is 40A5, which I have already covered if you remember. 40A5. I have already covered today itself. Okay. 43B. Believe it or not, this is also covered. Certain payments, certain expenses are allowed only on payment basis. Even if you are following mercantile basis, all the incomes you take on mercantile basis, deduction for all the expenses will be allowed on mercantile basis, but not for these expenses. These expenses will be allowed only on payment basis. C for CTBILR. CTBILR. C for contributions. Contribution to ASF, contribution to RPF, contribution to approved gratuity fund. For this you get the deduction only on payment basis. T for taxes, duties, cess payable under any law. But these taxes must be related to your business or profession, like GST you are paying, customs duty you are paying, export duty you are paying professional taxes, you are paying excise duty, what not. These are all business taxes. Rates and taxes of the building used for the purpose of business or profession. Yes or no? Many different types of taxes you might have to pay in the course of doing your business or profession. All those taxes will be allowed as a deduction, general deduction, yes or no? But only on payment basis. B for bonus or commission. Yesterday only I have taught you this. Then I, interest on business loan payable to specified lender, public financial institution, state finance corporation, state industrial investment corporation, then any scheduled bank or cooperative bank, any banking NBFC, yes or no? From them you have taken a business loan, and on that business loan you are paying interest. That interest will be allowed subject to payment basis. Yes or no? But if you have taken the business loan from other lenders, it will be allowed based on your method of accounting because it is not covered by 43B. Yes or no? Next one, L for leave salary to the employees. Salary to your employees or leave salary? Leave salary. R for amount paid to railway for use of railway asset in your business. In your business or profession, you might be using some assets of railway, and for the use of the assets of railway, you are supposed to make the payment. To whom? Railways. That is your business expense, but will be allowed only on payment basis. CTBILR. These all expenses are allowable as deduction. These are all your business expenses. So all the business income take on mercantile basis. All the business expenses you will take on mercantile basis, so that your PGBP will be calculated on mercantile basis. But even if you are calculating your PGBP on mercantile basis, these expenses will always be allowed on payment basis. This year expense, make the payment in this year and take the deduction. Oh, this year payment, make the payment on or before the due date of filing ROI of this year, then also take the deduction in this year. So these expenses must be paid in this year, or they must be paid on or before the due date of filing of ROI of this year. Then only these expenses will be allowed as a deduction from the business income of this year. What if this year's return filing due date is gone and these expenses are still payable? Still payable. 43B will be attracted. Now 43B will be attracted. And 43B says that since these expenses of this year are not paid on or before the due date of filing ROI of this year, now they will be disallowed. They will not be allowed as a deduction from this year's business income. The year in which they will be actually paid, they will be allowed as a deduction out of the business income of that year in which they are actually paid, and not from this year. Will you remember? CTBILR. CT. And one more expense is there which they have covered last year. Are you an assessee? Are you an assessee? Have you incurred any expenditure for the purpose of your business or profession? And for that expenditure, you are required to make payment to any micro or small enterprise. Micro or, did I say medium or only micro or small? If the payment is made to medium enterprise, then for that payment 43B is not attracted. I'm talking only about micro and, now who is micro and small enterprise? There is one law in India, MSMED Act. Which act? So as per the MSMED Act, micro, small and medium enterprises development act 2006. In that law, the definition of micro enterprise is given, small enterprise is given, medium enterprise is given, yes or no? We are concerned about only two enterprises, either micro or small. So which is a micro enterprise and which is a small enterprise? An enterprise in which the investment in plant and machinery or equipment does not exceed, and whose turnover is also does not exceed, then that type of enterprise is known as micro enterprise. Increase 10, you will get the definition of small enterprise. 10 crores and 50 crores. Hello sir. So now tell me, you are a sole proprietor. You have one business. You have one. Okay, no? In your business, you are selling some goods. In your business, you are selling some, or you are providing some services. You will be a micro enterprise. As per MSMED Act, you will be a, if in your business, if in your enterprise, the total investment in plant and machinery or equipments is less than or equal to 1 crore, as well as your turnover is less than equal to 5 crores. Okay? But what if it is more than 1 crore, but less than equal to 10 crore? More than 5 crore, less than equal to 50 crores? Then you will be treated as small enterprise. Yes or no? Now tell me, you are a micro or small enterprise? You are a, yes or no? So to take care of the interest of micro, small and medium enterprise, this MSMED Act has come. Okay? And this makes sure that the micro and small enterprises and medium enterprise are not exploited by big corporations. Because in entire India, no, big corporations are very few. But just imagine, micro and small enterprises are huge in number. entire economy is on your shoulders, but you are not able to survive. Why? Because big corporations who are buying from you, taking your services, taking the goods from you, are exploiting you in payment terms, are exploiting you in different ways. So to take care of that situation, to take care of the interest of the micro and small enterprises and medium enterprise, this law is made. Okay. Now, as per this law, as per any micro or small enterprise is there, and I am buying any goods from them, any services from them, so I have to make the payment to that micro or small enterprise within the time limit prescribed in section 15 of MSMED Act. Now see, I have to make the payment to micro or small enterprise within the time limit which is specified under section. Now see, what is the time limit specified? Time limit specified is, if this micro and small enterprise, see, I am an assessee, I am the assessee is buying some goods or services for business or profession. My business or profession, for myself, it is my expense, because from you I am buying goods and services for my business. Yes or no? Now tell me, as per the MSMED Act, for the goods or services which I have taken from you, section 15 of MSMED Act says that I have to make you the payment for those goods or services within the time limit given here. If I have some agreement with you, if I have some agreement with you, and in that agreement the time is prescribed, the due date is prescribed, so I have to make you the payment on or before that before the due date prescribed in that agreement. But remember, the number of days delay from date of accepting the goods and date of due date specified in the agreement should not be more than. So this big corporation can enter into an agreement with you that start giving your services, start giving your goods. We will enter into an agreement, and in that agreement we will write a date also, that for the goods which I have accepted, for the services which I have accepted from you, from the date of acceptance, within 30 days I will make you the payment. 30 days is okay. Within 15 days I will make you the payment. So agreement can specify 15 days, yes. Agreement can specify 20 days, yes. Agreement can specify 35 days, yes. But agreement cannot specify more than 45 days. Maximum 40 days is allowed as per MSMED Act, so that I don't exploit, I don't pressurize you to put a due date which is more than 45 days. Yes or no? Now, if there is no agreement, for example, no agreement between you and me, because the goods are not bought and sold on a regular basis, definitely agreement will not be made. One time affair, or I might be buying, very irregularly from you. So definitely for this thing, you and me will not enter into. So if there is no agreement, then 15 days. 15 days from the date of acceptance of goods or services. If there is no agreement. So if I have accepted today, no. From today, within 15 days, I'll have to make the payment. If there is no agreement. What if there is an agreement then? From today till the due date, till the specified in the, and from today till the due date, the number of days cannot be more than 45 days in the agreement. Yes or no? Understood, no? Sure. Now tell me, if the assessee incurs any expense for business or, and for that expense the assessee is required to make payment to, and if that payment is made beyond the specified under section, then it would be allowed as a deduction only in that previous year in which such payment is actually made. Till that time it will be disallowed as per section 43B. Now to understand, I will give you 1 or 2 examples. Pay attention. This is your previous year, 24-25. In this previous year, no, goods or services purchased on 1st of August 2024. This is the date on which I have purchased. Okay. Now there was an agreement between you and me. If there was so the due date will be prescribed in the agreement. But remember, from the date of acceptance till the due date, the total period has to be maximum 45 days. So for example, in the agreement, if the agreement was there, in the agreement, the due date for payment was 31st August 2024. Tell me, from this date to this date, what is the total difference? Is it more than 45 days? No. So then due date is valid. This due date as per section 15. Now tell me, for these goods and services, if the payment is made, between these two, between this period, then the payment is made within time limit. Payment is made within. And if the payment is made, for example, payment is made on 9th of August 2024. So is the payment made within on or before the due date? 43B will not be attracted. And the payment will be allowed in this year only. Yes or no? Second case, if the payment is made on 9 September 2024. 9 September, payment is made on or before the due date or after the due date. Now here 43B will be attracted. Here payment will be disallowed. But what 43B further says? It will be allowed as a deduction in that previous year in which the payment is actually, in which year the payment is actually made? Same previous year. So it will be allowed in the same previous year. Even if 43B is attracted, since the payment was made in this year only, so it will be allowed in this year. But there will be a problem in those cases when the goods are bought by the end of the year. Now pay attention. Now instead of these two dates, we'll take some other dates. Okay, no? Let's say the goods etc. were purchased on 9th of purchased on 17th of March 2025. 17th of March 2025. And agreement was there. And as per the agreement, I was supposed to pay you within 30 days. Meaning, let's say 16th of April 2025. Can I say this is previous year 24-25? This is previous year 25-26. Now tell me, in the previous year 24-25, the expenditure is incurred. Yes or no? Is it paid in previous year 24-25? No. See, the payment is happening on 6th April 2025. Can I say the payment is happening between the prescribed due, on or before the prescribed due date? Then I can take the deduction in 24-25 on what basis? Mercantile basis. Even if I have not paid in 24-25, still I can take the deduction in 24-25 based on mercantile basis. Because the payment, even if it is not made in the same year, it is made in the next year, it is made within the prescribed time limit. So the deduction will be allowed on mercantile basis. This year's expense, this year allowed. This year's expense allowed in this year. Why? Because the payment is made on or before the time limit prescribed in MSMED. Now what if the payment was made on 26th April. So is the payment made on or before the due date or after the due date? 43B will be attracted. And now this expense for which the payment is done after the due date, prescribed due date, yes or no? Cannot be claimed on mercantile basis. Cannot be claimed on. Now this payment will not be treated as this year's business expense, will not be allowed in this year, will be allowed in the year in which the payment is actually, when the payment is actually made. It will be allowed in the next year. Now somebody will say, sir, still the payment was made on or before the due date of filing my ROI. No, bullshit. That you are going to see only for CTBILR and not for this. Will you remember? Yes or no? This can be given as a case study in your examination. Ayo, as a small adjustment in your main question. Will you be able to crack this? Yes or no? Done. 43B done. Okay. Now pay attention. If 43B is done, 43B, can you read this? What is this? Deemed PGBP income as per section. Read 1, 2, 3, 4. Read. Don't read the first one. Read the second one. Read the third one. Read this one also. Sir, what is YKT? You know this, because I have already taught this. Balancing charge, I have already taught. This recovery of bad debts, I have already taught. Recovery of an amount by transfer of asset purchase for scientific research, that also I have taught. Only this point I have not yet explained. You want me to explain? Huh? Even if you will not say, I will explain. Any recovery of any benefit or recovery against any expense, any loss, any trading liability which was already allowed under the head. Expense was already allowed. Loss was already allowed. Trading liability was as a deduction under PGBP head. Now against this expense, against this loss, against this trading liability, if any benefit or recovery is received in this year, then that benefit, that recovery will be deemed to be your PGBP income. Sir, 1 or 2 examples. नहीं वो इधर आ गया, इधर 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 मैं ही बोलेगा. Stock was lying in your godown. 20 lakh worth of stock. Children were playing before Deepavali, trying to light rockets, whether it is going up or not. Few children, very notorious, lit a rocket. Rocket first went like this, then became like this, came inside your warehouse, go down. 20 lakh worth of stock lost by fire. You got what? Profit, no? 20 lakh worth of stock. If destroyed in fire, is it a profit in your business, no? Or it is a loss happening in the business? P&L debit. P&L loss by fire. How much? 20 lakh. Loss happening in the course of business amounting to 20 lakh allowed as a deduction. But fortunately, insurance was there. So you filed an insurance claim amounting to rupees 15 lakh. Claim was received. How much was the loss? Against that, how much you have recovered? How much you have recovered? 15. Meaning, effective amount of loss. You should have taken a deduction of 5 lakh only. But how much deduction you have already taken? How much extra deduction you have taken? Deemed PGBP income. Meaning, to the extent of recovery, the loss is already recovered, no? That amount will be deemed PGBP income. Yes or no? Your employee ran away with 2 lakh rupees cash. Morning time he comes, opens the shop, full day collection will be done. That collection next morning he deposits in the bank while coming to the shop. Yes or no? So full day collection 2 lakh rupees. He went home. Next day morning he did not come. Next to next day morning did not come. Next to next day did not come. Shop opened, not opened. Why? Employee ran away with cash and everything. Now you will be very happy, no? It is a benefit for you, no? Or a loss? Immediately you will go to police station, you will lodge an FIR, give all the details of that employee who has siphoned your money, who has embezzled your money and who has run away. Yes or no? FIR will be filed, and now there are no scope that you can find him anywhere. You tried to search him, you tried to find him, you have lodged an FIR. Yes or no? Now he has run away with your 2 lakh rupees. He is not traceable. His phone is off also. Yes or no? You have tried all your, possibilities to get him. But now you are not getting him. FIR is also filed. Now this 2 lakh rupees loss is a genuine loss. Yes or no? Claim it as a deduction. After 5-6 months, a year or two, your employee was caught by the police. Immediately you got a call that, sir, we have grabbed that person who ran away with your money. Immediately you ran. Thank you, you caught him. And now you are asking him, where is my money? Police also asked, how much he ran away with? Only 20,000 was remaining with him, which police recovered from him. 1,80,000 he spent. Only 20,000 was remaining with him. Police recovered that 20,000 and you got that 20,000. Actually speaking, the loss was 2 lakhs, but out of that 20,000 is recovered, no? How much should be your loss? But how much you have debited? Extra 20,000, no? Which you have already recovered, deemed PGBP income. Now if you want, no, I can create such type of example, n number of examples. Everywhere you have to check only one thing. Loss is there, expense is there, trading liability is there. Was it already allowed under PGBP head? Yes. And against this, if I am getting any recovery or benefit, that recovery or benefit will always be treated as my PGBP income. Yes or no? Now under section 41, there is one very important thing you should keep in mind. Very important thing. And what is that thing? That if these recoveries are made in this year, will always be taxable under the head PGBP. Even if the recoveries are related to a business which is no more in existence. These benefits you are getting in this previous year will be taxable under the head PGBP, as your deemed PGBP income under the head PGBP only. Yes or no? Even if these recoveries, these benefits are for a business which is no more in existence in this year, still the amount will be taxable here only. Yes or no? So this was your section 41. Knowingly or unknowingly, out of the 5 parts of this chapter, 4 parts you have completed. First, basics. Now you have complete idea that what is taxable under this head and what is not taxable. Second part, deductions. What is to be allowed as a deduction, meaning what amounts can be reduced while calculating your profits. Number 3, disallowances. We completed all the disallowances. Yes or no? Meaning you now know that which all things cannot be reduced while calculating your PGBP income. And also you came to know that which incomes will be treated as deemed PGBP income. Now you are all set to solve the questions. Ready? Take a break, small break, and after the break we'll start with the question.